Hi guys, welcome back to my YouTube channel where I'll be providing you content for personal finance and for small businesses. So let's talk financially structuring your business. As a business owner, whilst you love what you do and delivering it to your customers, it is also very important that you remember that you're still running a business and the business needs to be profitable eventually. Now, what are my tips for helping you financially structure your business? Number one, regularly review your bank statements. Know what's coming in and what's going out. Make sure that you're not paying for things that you're not supposed to be paying for. And also, when your customers say they've paid you, it's important you do your own due diligence. Don't just take their word for it. Check, check, check. Regularly review your bank statement. Helps you keep an eye on the numbers. Number two tip, get your customers to pay you on time. Now by this, you could ask customers to pay upfront. Now my caveat to asking customers to pay upfront is also protecting the customers so they're not at risk of losing their money should anything happen. I have contracts in place. Also have backup plans, a plan B should anything happen to you and you're not able to do it. Number three tip, pay your suppliers on time. Remember, your reputation is priceless. Very, very important. Number four, know the cost of running your business. This is probably more straightforward in a product-based business compared to a service-based business. It gets a bit more tricky there. But how you get around it in a service-based business is by tracking the time it takes for you to deliver the service you offer to your customers. As a business owner, the more you build your business, there are three financial statements that you really need to acquaint yourself with. The first is your profit and loss statement. The second is your balance sheet, and the third is your cash flow. In this video, I would only be focusing on your profit and loss because I think that is the basis. When you master this, it makes it easier for you to understand the other two. What is a profit and loss statement? Popularly known as a P&L. This basically shows you all your income and expenses within a given period. And it shows whether or not the business has been profitable or has made a loss during that period. How do we define period? A period could be a calendar month. It could be a quarter. It could be a full financial year. So it just really depends at which point in the year or at what point in the business that you want to track that performance. Now, to help you understand this a bit better, let's take a look at an imaginary business I came up with. OJ Bakery. I don't know what it is in me and baking. I love baking, but it's just not something I'm very good at. Take a look at what I baked last year Christmas. Turned out not so well after all. Anyways, let's get to OJ Bakery and explain what a P&L does. If I wanted to see how OJ Bakery performed, let's take a look. OJ Bakery has a store on Bermondsey Street in London. I have 2 members of staff who support me, and we open 6 days a week selling cakes, pastries and drinks. To know whether we're profitable in the month of January, I'll start by recording all of our income and expenses between the 1st of Jan and the 31st of Jan 2021. Let's start with the income. On cakes, we sold £10,000 worth of cakes. On pastries, we sold £5,000 worth of pastries. On drinks, we sold £1,000, bringing our total sales in at £16,000 for the month of January. The cost of ingredients, that is the cost of flour, milk, sugar, and other things for making the cake, pastries, and supplying the drinks, all come in at £4,000. Other cost of production comes in at £1,000. Other cost of production includes the cost of our paper cups, the napkins we give to our customers as well when they purchase the cakes or the pastries. After deducting the cost of ingredients and my cost of production, I get my margin coming in at £11,000. Now, to fully capture what my profit is, I need to deduct other costs that aren't directly linked to production. So I'll start with my rent. We rent a shop space on Bermondsey Street we pay £2,000 a month for rent. On utilities, we spend about £500 in the month of January. That is the cost of electricity, water, and other services as well. Salaries are coming in at £4,000 for the month of January. Other admin costs are coming in at £1,000. And by other admin costs, I've included the cost of insurance and other costs such as cleaning as well. After deducting all these additional expenses from my margin, I am left with my profit of $3,500. This tells me in the month of January, OJ Bakery was profitable. It turns out OJ Bakery actually made a profit of $3,500 in January. Not bad at all. But I was only able to do this effectively with good record keeping and regularly tracking my inflows and outflows. That is what is coming into the business and what is going out. Remember, the longer you leave before, the harder it is for you to track your performance. My advice to any business owner is to set time apart every week to regularly review your finances. Remember, as much as you love what you do, you are still running a business, and the aim is for the business to be profitable. Thanks for watching again. If you like this video, remember to hit the subscribe and like button, and also share with your friends and family as well.